Welcome back to week 3. We will be going over keeping things simple. KISS, KISS. Keep it simple, sweetheart. We do not need to overcomplicate a very complicated thing. So that's my rule of thumb. I like to keep things very black and white and simple to the point. So I'm going to go through the 5 KPIs that the majority of both businesses in any spectrum need to have. Okay, 1, profit and loss key metrics for your industry. So you can find those by Googling them. So we could do warehouse, we could do restaurant, we could be manufacturing, we could do professional services. Each industry has some general KPIs that everybody needs to educate themselves. And that is where we're going to start on the KISS method. 1, get to know your industry and get to know your key metrics. 2,
that is so important.
variable.
I don't want to interrupt you, but I got to say something about that because so many entrepreneurs don't even know where they stand in their industry. Okay. How are they racking up? How are they comparing to their competition? How are they evolving? How are they taking the right steps to meet the demands of the industry moving forward? So I think that is such a powerful feature of your program.
Yes, it is, because a lot of people don't realize how important it is in the planning part. So when we do the live plan and we integrate your vision, your new short-term goals, your new long-term goals, we also dial in there the very key industry metrics. And that is the core foundation of being able to predict your future.
Awesome. That is really powerful. So when we're moving on to the next step here, which are the key variables to gather from the report, and then the general equations that you may get at a glance. Let's talk a little bit more about that.
Yeah. So on every financial statement, there's revenue, there's expenses, there's cost of goods, there's gross profit margin, there's net profit. So we need to get familiar with the financial statements. So during this training, I open up an accounting program. We dial in, even you can share your screen and we can look at your numbers, and we dial into the very important key metrics. Probably the adjusted gross profit margin, the labor to revenue profit percentages, and the net, and then your cost of goods. So if you have labor, cost of goods, adjusted gross profit margins, and net, then those are some of the main variables that we'll need to calculate.
Absolutely. And then I also see here that we're going to talk about how to rate your KPI and see if it's good, bad, or needs improvement. I mean, that would be so interesting and so important as far as moving your business forward to the next level, to be able to not only know what your KPIs are, not only to know what your metrics are, not only to know where you stand in your industry, but how to rate those KPIs and see where they need improvement. I mean, it's just so powerful.
That it really is. And that is the key to success, is just being able to look at like a 15-page profit and loss statement and pick your 5 variables and calculate your numbers. Like, you really don't have to get bogged down by all the details.
Okay. So as it relates now, because I can tell you how it relates as far as when we're talking about funding, when we're talking about how these businesses are going to get credit, how are they going to move forward as far as being able to prove. And we talked about that the other day. So for example, if we wanted to get funding for $10 million, $20 million, $100 million, then all of these metrics are so important when we're talking about being able to present these to financial institutions, to lenders, to be able to get those real big loans and real big funding opportunities to really grow this business to the next level.
That's exactly correct. And so the point of the whole thing is to get more cash, right? Yes. Everybody wants to know they can leverage their revenue, leverage their business income, leverage their business credit. That is the whole point, because the banks are going to measure your EBITDA, your inventory terms, your debt to income ratio, your solvency and liquidity. And that is why we're going to dive into those financial statements and really use these tools to make sure that things are in the proper place so you can get more cash.
Absolutely. And I think a lot of times business owners, they only think about one form of funding or another. Okay. So they're only thinking about a line of credit. They're only thinking about a credit card. They're only thinking about, for example, an SBA loan. But what about those other loans that you can measure now with the Happy CEO program? What about the loan on your inventory? What about the loan on your assets? What about a loan on your accounts receivables? All those things are possible, ladies and gentlemen, but being able to outline them, to have a plan, and to be able to present them, that is the key to get those funding items.
That is correct. And in the Happy CEO, one of the general foundational reporting that we do is set up an investor pitch. So you can deliver the correct financials, the correct cash flow, the correct balance sheet and income statement, and your forecast, so they know what you need the money for and how you're going to utilize it. And that is one of the biggest questions to most funders and banks is, what are you going to use the money for and how much do you need?
Absolutely.
And we figure that all out in the first step of the program.
So Charity, I got to tell you, I'm really interested. I'm really excited about it. I know there's a ton of other happy CEOs to be and entrepreneurs out there that want to take advantage of this and to be able to talk to you about their business. How do they get in touch with you, Charity? How do we get them a part of the program?
Yes, well, you can always visit nowanswergroup.com. That's my website. There's a yellow button that says book a strategy call, and that will get you on my calendar, and then we can talk in person.